Melissa, thank you so much for joining us. You are the co-founder of Ureeka and a managing partner at 1863 Ventures. And something that I personally learned from covering small business through the pandemic is that you are an integral part to the small business ecosystem and have partnerships with many of the folks that are here today, including Goldman Sachs and many other large corporations. So I think a great place to start would be if you could kind of give us a little bit of an overview on how Ureeka helps corporations help small business and the economy.
Sure, well thank you for having me. You know, I think one of the things we realized, particularly having been a small business owner and finally getting to a point of scale as a business, that there are three things that entrepreneurs need. They need capital, obviously, to grow their business. They need coaching, because entrepreneurship, in my mind, is a team sport, and they need community. It's helpful to have a group of peers who can be brutally honest with you, but also very supportive, share what they have learned, and help you avoid some pitfalls. And so Ureeka is designed to do all of that. We are kind of the 3 C's of small business. So we provide community through an online platform that entrepreneurs can talk to entrepreneurs. We have coaches, so if you wake up at 3 o'clock in the morning in a panic, and you have a question, you can go online, and you're guaranteed there's a coach is going to be there to help you. And then obviously capital. We have been extremely fortunate that post-COVID and post-George Floyd, we've been able to distribute over $150 million in grants to small businesses all across the country, but also have built into the platform an opportunity to help you prepare to raise debt, to go get a government grant, and or to raise equity. And so we've been able to figure out what are the 3 primary drivers and levers, and how do we bring that in a sustainable, easy, accessible way through your phone.
So talking about the 3 levers and capital access, right, it still is pretty abysmal in terms of, you know, we had the PPP and we had, you know, the restaurant $30 billion stimulus go through, but today small businesses are facing another pretty huge economic tsunami with potential recession looming, inflation at a 40-year high, and, you know, hiring problems, supply chain issues. What can be done? Can you talk a little bit about those 3 levers for access to capital and how founders can go out and source capital right now?
So, you know, I mean, I think we have to be mindful that there's 3 types of capital, right? So there's tons of grants still out there. Lots of organizations and companies are still doing COVID-related relief, as well as, you know, post-George Floyd, looking at women and people of color. I think community, one of the things that I talked about in my session is, you know, most people in a recession tend to buckle down and kind of go internal. Look outside. This is a massive opportunity. Think about mergers and acquisitions or joint ventures. Think about strategic partnerships you didn't think about before. And also be mindful, while the Treasury is still working on, the SSBCI is coming down. So people should start having relationship with local economic development organizations. As those federal dollars come down, that can be given out as loans or equity to small businesses who are seeking it. And so make sure that you are financially prepared, your business plan is ready to be able to receive that next inflow of capital.
Mm-hmm. And in terms of, you know, preparing for the oncoming potential recession, which is looking more and more likely, what are some of the guidance that you're giving to business owners right now about navigating the current environment?
Yeah, there's 2 levers that I like to talk about: people and profits. I think when it comes to people, you know, most people tend to let's just fire everybody. But think about that, right? The cost to hire people is so much more expensive than the cost to retain. And in a recession, you really want to think about managing your resources well. So I think 1, give your employees a chance to be entrepreneurs. Let them do what they do best and solve the problems that you have delegated to them. Give them new parameters and less constraints to think about how do they solve problems faster and quicker, and create rewards around that. Think about who are your high-performing employees and how do you shore them up through a new bonus structure or compensation. And if you have any that are in the red, then you should get rid of them. If they're yellow, have some conversations, but make decisions quickly. And the final thing I would say is communicate, communicate, communicate. Make sure they understand what's happening. The worst thing you want is any lack of clarity or understanding of what's happening. So if you typically talk to your staff once a month, talk to them once a week. And maybe not all of them, that pick 3 to 4 that you check in with over the course of a quarter, because then you have that multiplier effect of instilling confidence and calm. On the financial side, think about getting as much debt as possible as the interest rates continue to climb. Is this a right time for you? Obviously, really figure out what are your financial drivers and watch those. Create micro goals. Most of the time we operate annually or quarterly. Have weekly goals, monitor your cash flow. At 1863, when COVID happened and we said that America lost 50% of its black businesses, we had a 95% success rate and survivability, and they're still going. And it's because of 2 things. 1, they had a real handle on their reserves, and 2, they were regularly watching watching their financials to understand when is it time to invest, when is it time to pull back, and understanding that cash does not determine your fate, but is a lever that you can control to really drive profitability and growth.
And for those that do have cash, you had said, we were speaking earlier, that actually now is a good time to think about mergers and acquisitions.
Absolutely.
While Wall Street might be taking a pause, that doesn't mean that Main Street needs to take a pause.
Absolutely, this is a great time, right? Particularly in the small business community, right? Oftentimes we have cornered a certain market and it's hard for us to get to scale because we don't understand the competitive headwinds. This is a great time to say, hey, we're going after similar customers, or how do I extend my consumers by getting on a JV? How do I extend my products by acquiring another company? This is the time to do that, particularly if you know a company is not performing as well as you are and you have some cash. You could do a part cash deal, a part compensation deal of thinking about who are some key people to keep, and you can do a performance-based deal that maybe you don't get all your cash right now, but if you continue to perform well quarter over quarter, and for the potential acquiring company, that gives them opportunity to see guaranteed cash flow that they wouldn't have automatically had.
And so in terms of, we talked about some of the best advice, what are some mistakes that you see founders making right now that they can potentially avoid?
I think one is becoming insular and really losing sight. I mean, this is a unique point in time, not just the recession, but we have a war that if you're in a product business, you're watching the routes of travel for international goods coming because of the Ukraine and Russia. You have midterm elections, which is going to really cause some stress and strain in the workforce. And so I think the three biggest mistakes are firing everybody or getting rid of people and not really understanding, are you getting rid of the right people, and how do you really leverage those existing resources to drive profitability? I think the second thing is they start hoarding cash for all the wrong reasons. Having cash in your pocket is not the same as having it work for you in a bank or sitting somewhere else. So what are the investments you can make strategically to really drive that bottom line? And the third thing is to panic. Remain calm. This is not something that other companies have not seen before. This is a chance to really, again, plan, go back to the basics, have your business plan, have your business continuity plan, and really make sure that you're balancing your time of working in the business and doing all the tasks, but working on the business and picking your head up and making sure you're mindful of what's happening in the world around you and how do you respond in the moment. You have to be decisive in this time.
So we're just about out of time, but I like to end on a lighter note. And so broadly speaking, what's one thing that you're seeing right now that is overhyped and one thing that's underhyped? And it could either be in the small business ecosystem and universe or just out there in general.
Sure. I think venture capital is still overhyped. I mean, it's lovely, it's wonderful, I'm a venture capitalist, but it's overhyped. It's not for everybody, so I think people should stop doing that. I think what's underhyped is investing in yourself, figuring out how to earn cash. Don't waste time trying to think about getting somebody else's money. How do you manage the cash that you have on hand? Because you are the best investment in your business that you can get.
Awesome. Well, on that note, thank you so much, Melissa.
Thank you, pleasure.